Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The USD weakened across the board on the Fed's decision, but eventually erased all the losses and increased the gains as traders digested all the information and realized the projected rate path was more hawkish than market's pricing. In fact, the dot plot showed that the FMC projected two more rate cuts for 2025 by a narrow majority, with the rest of officials expecting just one more or even none. Moreover, the Fed projected just one cut in 2026 compared to three that the market was pricing before the decision. Fetcher Powell then labeled the rate cut as a risk management move, given the weakening in the labor market data. But overall, he sounded pretty neutral, even though he understandably placed more emphasis on the labor market given the two consecutive soft NFP reports. The day after the FMC decision, we got a solid US jobless claims report, and the greenback increased the gains further. Looking forward, it's going to be all about the data. Strong data will likely trigger a hawkish repricing in interest rates expectations and support the greenback. On the other hand, weak data will likely continue to weigh on the currency. On the JPY side, the BOJ kept interest rates unchanged as expected last week, but the market got surprised by two members voting for a rate hike. The yen initially rallied, but once Governor Ueda started speaking, the gains began to fade and eventually got erased completely as Ueda downplayed the dissenting votes. Now on the daily chart, we can see that USD JPY eventually rallied all the way back to this key resistance around the 148.50 level. That's where we can expect the sellers to step in with a defined risk above the resistance to position for a drop back into the major trend line. The buyers, on the other hand, will want to see the price breaking higher to increase the bullish bets into the 151 handle next. On the 4-hour chart, we can see more clearly the range-bound price action that's been going on since August. We got the spike lower on the Fed's decision, but eventually the price bounced on the trend line and rallied all the way back to the resistance. There's not much else we can glean from this time frame, so we need to zoom in to see some more details. On the 1-hour chart, we can see that we have this minor support zone between the 147.20 and 147.50 levels. If the price falls into this zone, we can expect the buyers to step in with a defined risk below the support zone to position for a rally into the 151 handle next. The sellers, on the other hand, will want to see the price breaking lower to pile in for a drop into this major trend line. These red lines define the average daily range for today. For the upcoming catalysts, today we have the US flash PMIs as well as Fetcher Powell speaking. Tomorrow we have the Japanese flash PMIs. On Thursday we get the latest US jobless claims figures. And on Friday we conclude the week with the Tokyo CPI and the US PCE report. Keep also an eye on Fed speaker this week.